TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the December 28th fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who's persevering through this nasty cold out here. I still have the hacks, so that's why I'm keeping the intro kind of low-key out here, just because I don't really want to spew all over the microphone out here. In any event, thanks so much for joining us today. You can give me a call at 877-927-6648. Would love to hear from you, see what you're looking at, see how I can assist you with whatever it is that you're trying to answer out there. Add another pair of eyes to the charts. You can always send me an email at steve@tfnn.com. In the subject heading, it's best if you put radio show question. That way it just sticks out as I filter through the junk email. Your email is not junk, and I want to make sure that I can see that. So uniformly, if we put radio show question, that makes it pretty easy. And then, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 35 points, trading at 23,102. S&P is flat, and I mean totally flat. NASDAQ is up 12 points. Russell is flat off 80 pennies. Semis are up 10. Trannies are down 46. So we've got a market that isn't certain which way to go. And we'll discuss the reasons why and what it is that we'll be looking for. You've got the gold is flat, trading up 20 pennies. Silver is flat. It's up a nickel. You've got light sweet crude up 73 cents, leading the charge to the upside. Amazon, Tesla. Amazon's up 25, a little over almost 2%. Tesla up nearly 5%. That's $15 the upside. Chipotle's up $9, 2%. First Republic Bank of San Francisco, that's up nearly 6%. Nettie's is taking it on the chin dollar-wise, off a little over $11, or nearly 4.5%. Select Income Realty, I don't know what it is. That's down 57%. That's a stinger. What else do we have out here? AutoZone is down 4. Decker's Outdoor down about 3. So we've got things to look at. Of course, I want to look at what you want to look at. Nothing on deck right now. So this is a good time to either call in, send in, ping me, something along those lines. But let's go take a look at what the markets are doing, just so that you can get a feel. Yesterday when we took a look at them, we saw that price was trading between support and resistance. It was very clearly defined for you and I. What ended up occurring, let's just do a quick update there. We were taking a look at the ES Mini as being the significant equity futures contract to pay attention to. Price did push down below support, but this is a daily time frame chart, and therefore it's always the end of day reading that is key. So we do know about the ES Mini. That is the left-hand panel if you watch this on Tiger TV. It held support. That was 24.17. Price has then gone up to its next level. What's the next level? Well, typically there's 3 lines inside our profiles. There's the top, the bottom. That's easy to distinguish. And then oftentimes there's a center. Sometimes that center can be a sneaky little bugger. It can be down at the bottom. It can be up at, when I say the bottom of the box, or maybe it's up at the top of the box. Well, right now it's at 25.18. If we take a look at today's high out here, it's 25.19. Now, at 25.18, both buyers and sellers believe that that is fair value. That means buyers are okay buying, sellers are okay selling. It's why we're not moving anywhere. There's no conviction as we speak at 1:10 in the afternoon on a Friday. After everything the market has been through out here, there is no conviction. We take a look at the ES Mini. If we look at the NQ, that is the next panel, price is just a smidgen above its center line. That center line is 63.03 out there. We're at 63.18. So that qualifies as a smidgen. Take a look at the Dow Equity Futures contract. Where did price stop overnight? Right there, right smack dab at that center line of that profile. That was at 23,357. The actual high overnight was 23,372. No big deal. Now, the Russell 2000 is a whole different story. Nowhere near its center line. In fact, the structure of its box is bullish in nature. The bottom is 1270. The center is 1308. The top is 1422. Now, the Russell 2000 is not likely to go ahead and carry all of the other boats higher. It's waiting for a signal from these three. If we get a clear signal, a break of these center lines with conviction, then the next level should be attained. Now, that may be difficult to do. The reason why I say that may be difficult to do is, well, the Dow equity futures contract looks to me like the first one to get to the top of the box, if it can do that, the top of the hill, 23,674. So that's what you would be watching. This is why the markets are doing what they're doing. They are also trading above support. We can call this a little bit of resistance out there. In fact, we just did. It's a little bit of resistance out there. If we take a look at support, it's nothing more than Stevie's red line. All the equity futures contracts are trading above it. We still are in this neutral zone coming into the end of the year. That's right. Only a day and a half left of trading. And there's a lot of folks that may not do much trading when it comes to Monday, even though it is a full day of trading out there. So this is what the markets are doing. Do you know which way they're going to head to? You might have a case that you want to make. I could make the exact opposite case, regardless of which one it is that you take out there. Now, what I really think we ought to do is try to figure out which case is the more difficult to make. Because then if that case fails, then you would say, something to think about. So which case is it that should be the more difficult one to make out here? Is it the bearish case? Is it the bullish case? Well, why don't we just simply do this? Let's go take a look at the Dow, because I think the Dow is the clearest of indices for you and I to take a look at to get a feel for what the market is doing. First, let's just put this off. Let's get this off of the daily, put it to the monthly out here, because inside the Dow, it is the clear indice that is in a consolidation, or was presumed to be in a consolidation. Why? Because we can see at the high, the January high at 26,616.71, we can see how price was contained within that, because the candle itself, the body of the candle, is the essence of price, not the extremes being those upper and lower shadows or wicks, whichever it is you prefer to call them. We can see 26,616.71 contained price on a monthly basis. We can also see that at the February lows, February and April, in the 23,360 area, contained price. What's really interesting, what's going to be interesting come the 4 p.m. session on Monday, is does the Dow finish back at or above or below 23,360? 23,360. You're 23,158. It can do that these days in a period of 30 seconds. It can get up there. Will the consolidation hold? Remember, consolidations can go on for a long time. What do I mean a long time? On average, 70 to 80 weeks out there. I think we're only in week number 48. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So to just finish off the Dow out here, it is going to be more difficult, in my opinion. It is easier for the bears to make their case out here. And the reason is because of the wonderful work that certainly that I learned from by Bud Rolfs. For those of you that are long-time timers out here, know that Bud used to host a show here for a number of years. He's the godfather of the primary trading range boundary lines. I've automated his system, so to speak, to create the horizontal trading range system out there. But as he was able to teach both you and I, when you have these consolidations out here, when you break through them, what it does is it gives you a measured move equal to or greater than the consolidation. But typically when you break a consolidation, price will come back and test either side of that. That is exactly where we're at in the Dow. Are we right to the T? No, but we were close enough. The actual high today inside the Dow, 23,300. And I'm using 23,360 as a level. So if we do see the Dow close above 23,360, the more difficult case, which would be the bullish case, will have been made out there. So that's Stevie's thinking as we speak at 1:20 in the afternoon. We've got a couple of callers on the line. Let's go to our first caller, and that's John in Philly. John, thanks for calling. Thanks for holding. How are you today?
Hey, Steve-O, I'm very good, and we all wish you a speedy recovery, although we could have said that 7 days ago.
We could have. Thank you. It's pretty good. It's just it's crazy when I start to talk with major inflection. I could just feel the cough coming right up. So it's like, don't do that.
Steve, you could help me, please, with bisecting the NASDAQ index. And, Steve, I wanted to ask you if you'd specifically analyze and look at the patterns and the price levels of the composite. And I just wanted to share one thing for you. You and I have not talked about this. Maybe your listeners would be interested. The NASDAQ 100.
Yes.
Which is the underlying for the futures that we trade and analyze. The NDX 100 went through a major and significant rebalancing last Friday's close.
Right.
And of course that was brought to our attention, well documented and thoroughly explained by David White.
Right.
I will share with you just something I've learned over my many years that applies in this case. Now that the NDX 100 has been rebalanced, and the likes of Amazon, Apple, Google having a much lesser percentage weighting in that index, what that gives us is that post-December 21st, the NDX 100 is a different animal,
Sure.
and conceivably meaningfully different than that same index pre-December 21st. So when I'm looking at prior highs and lows on the NDX 100, I'm saying to myself, beware, that may give us false conclusions, because it's, in effect, comparing apples with oranges.
No doubt.
We
No
do
doubt.
not have that problem with the composite index, and hence I ask you to assess that index for us, please.
Sure. So one thing, though, that others can do out there, John, because of that, is to try to make some decisions about the NDX itself, is you could go over and take a look at the equal-weighted version of the Qs, just to get a feel for if there's a message there. So, and that's QQEW, folks, so you might want to do that. But in the case of the NASDAQ composite, what specifically, I know you had posted a chart inside of the den, taking a look at the, take a look at a trend line on a logarithmic scale out there. But what else is, how can I assist you? How can I best assist you today?
Here's the one question I haven't answered for myself, hoping you can shed light upon, and that is, what does price need to get up to from the lows last Wednesday to tell us, you know, this bounce is not just a bounce, it's something much more bullish, and that low, which tested the rising channel boundary on the monthly logarithmic chart, was a key test and potentially a significant bottom. So what price do we need to get up to, and anything else you might throw in there to answer that sort of question would be great.
Yeah, no problem. I would say that there are, there's just really, in essence, one price, and it's right around 68.45. Now, John, before I clicked over to you and I finished up the Dow, I referenced Bud Rolfe's, and I referenced his primary trading range boundary lines. And so I just had a moment to go ahead and punch a new chart up on my screen. And this is a monthly look at the NASDAQ composite, but it has the weekly. The green lines out here are the weekly horizontal trading range level. So I would say on Monday, if the NASDAQ composite were to close above the 68.45 level, that is the bottom of that weekly profile. And the weekly profile here seems to contain price better than the monthly. When I say weekly profile, I really mean the weekly horizontal trading range. For example, I'll go ahead and click on the monthly right now, and these are the red lines that show up on the chart. But as I turn the green lines off, the weekly, it's not that these are bad necessarily. It's just that when I take a look at the 2,000 high, for example, but I haven't done enough work here, so I'd have to change it just slightly. But I don't think that it's going to change that much. But here, I think it is the weekly reference horizontal trading ranges that would be one of the elements that would provide you and I with some additional information that, you know what, at least the consolidation in essence hasn't held now, or has at least held. What's also interesting about that horizontal trading range level is that's very near, very close to the actual close of 2017. So it's right around that area of 68.45 that would make you say, well, maybe that was a significant bottom because of the pattern that it made when it down there. And the pattern that John is looking at, folks, is we can take this chart here and we can go ahead and we can change it to a logarithmic scale. And on the logarithmic scale, correct me if I'm wrong, I believe you were just simply using a trend line, in essence, that you went from the October lows of 2000. Oops, that didn't. You have to grab, when you're doing this live, you have to grab the right tool. Otherwise, it just doesn't work. But look, folks, if we take that low, and we just connect it to the low out here in February 2016, I'm sorry that it's a green line. I'll change that in a moment. And then I can go ahead and connect those two swing points, if you will. And from here, I can go ahead and I can move it to the, extend it to the left, extend it to the right. And what John was pointing out, and let's go ahead and change that line to a red line out here, you can see how the move lower from a logarithmic standpoint found support right there. So, John, I think the answer to that question is going to be on a linear scale, 68-45. At least that's my quick answer right now. What say you?
Thank you very much, Steve. I'm going to thank you for your help, and just might ask after I hang up if you have time to just pull up the daily chart and share with you any parameters that jump out at you on the same index. That'd be great. So
okay.
Thanks again for your help. And
you bet. You bet. And John, I'll do that after this break. We're going to go to Garwin, California, and then after the Garwin, we'll come back and take a look at the daily time frame for the NASDAQ Composite. Thanks so much for calling. Have a happy New Year. You bet. This is Steve Rhodes with TFNN. Right now, we've got the Dow. She's off about 70 points. S&P's down 3. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has launched our best sale of the year. The Tiger Dollar end of year sale runs through December 31st only. And right now you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Let's go out to Newport Beach and speak with Garo. Garo, thanks for holding through that segment, and thanks for calling in. And it's going to be good to hear your voice before we head into the new year. I've really appreciated the times that you've called in and the information that you've been able to share with our viewers and listeners out there. So, again, thanks for holding, and how are you today?
I'm very good. Merry Christmas to you. It's a little bit too late.
No, it's never too late. It's never too late. Merry Christmas to you. How are you today? And we're going to take a look at ABIO Med. I'm not sure how you pronounce it, but tell us what you're looking at here and what assistance I might be able to provide to you.
Okay, this is a stock that it's a while that I go long and short, and of course I go long and short with LABU and LABD.
Okay.
These two. But ABMD is a very wild stock that the movement is very outrageous. It plays $10-12 a day, but today is very slow.
Yes.
Usually when I want to go long for a while with something, I have to make sure that the 30-day, the 30-minute, 60-minute, and 120-minute will hit that. The bar will hit that dot before I go into that long position.
Yes. Yes.
What it happened on 26th, all three of them, they hit that. The bar hit the dot, and the dot moved down.
Yes.
I bought it at 60 minutes, which was on December the 26th at $282.72. Now on a 60-minute, it hits the 200-day moving average, the exponential today.
Okay.
On daily chart, still there is room to go up to that 50-day moving average, which is around $335 and change.
Yes.
Or a little bit above than that is the 200-day exponential, which is 338 and change. To your opinion, will that get to that point, or the play is ended, the part is over here?
Yeah, so a couple of ways for us to take a look at it, so using some different tools. That way, Garo's able to at least get some different input with some different tools, see if they line up with what he is taking a look at. Even though today is a very narrow body day out there, and I'll put the daily time frame chart out here, the positive that you have in this is that yesterday was a close above resistance, the resistance being that TAS market profile. And that level was 313.95. Now, today was nothing more than a test of that. Now, it was 314 versus 313.95. We're not going to complain about 5 cents out here. If it stays above 313.95, what it is short-term bullish. If I also just look at the swing point, which was from November 20th, that had volume of 963,000 shares out there. The final test of that took place on December 24th, when we had that big move. Even though it was a half day out here, but it was still a big move to the downside. There was 340,000 shares going against 896. Even if we multiply times 2 out there, it's still a lighter volume. So it said, okay, the sellers had vacated. Where price is going to head to on a daily chart is likely the candle session of December 12th or the session of December 3rd. And it will continue or should continue to move higher if it can take those levels out with volume, 572,000 or 376,000 shares. So it should be able to push up through that area. But if it's moving up there with light volume, it doesn't have real conviction behind the move out there. 324.89 is the next weekly hurdle, and that is its center of its box or point of control. So if you're to see a close above that level, and that's going to take place before it would go test those swing points from December 12th or December 3rd out here, the structure of this box is bullish. And so if it can close with some conviction above 324.89, I would say that would be the volume on those 2 sessions we were looking at on a daily chart. This would actually say this could make a move to 398.32. It doesn't say how long, but it says that, and I would also assume that, that the markets would be bullish at that time too. It'd be a little bit easier if that were the case. So that's got 398. Before it would get to 398, though, I pull over my other tools out here. And what I do like from a bottoming standpoint or more counter trend rally standpoint out here, Garo, was that on the 26th, price moved right above Stevie's red line. And that's at priced at 297.60 right now. This would tell me that price should make a run for about the 351 level. That's this little jagged dash line out here. That happens to be the weekly version of the oscillator unchanged line, and that's where you could also see some resistance out here. So at this stage of the game, the easy way for me to answer the question is, it convinced us on a daily time frame that the sellers were done at this stage in time. And now it's above a level of resistance on a daily. If it stays above that, short-term bullish. If you can close above 325, let's call it, with some conviction, that says you can run up, I would say, to the 351 level. That's what I would be watching next. The monthly chart is a bit troublesome out here. But at this stage, you know, we have to go, you have to go with, I think, the daily and the weekly out there. So I see that today, on a daily, was the first dot to the downside, giving you a not I guess from your standpoint, not the daily confirmation of a bullish message, but at least the beginning of one. Yes?
Yes. That is true. That is true. But that one dot doesn't mean nothing.
I know. I understand. I understand. Hey, but it's better to have that than to not have that at this stage, I would think.
Absolutely.
Yeah.
Absolutely.
Yeah.
Yes, you're right. You're right. No, that is fine. No, I'm not going to be staying until 351 at all. If it gives me just a little bit more, just close to that 50-day, then I'll get out. I'll get out because I'm in it at 287.72, and I made a very good profit. But I make more money on LABU and LABD.
Sure.
That I can buy 1,200, 1,500 shares or 2,000 shares at a time. The volume is very high, and the movement is very, very good. It's excellent. I mean, these two stocks are made for day traders. It's very good. But for some reason, I do trade that ABMD too. It's not bad. When the volume is high, the move is very good. Excellent.
Good. Garo, quick question for you before we go to the breakout here. When you had mentioned the 200 period, today you had mentioned the exponential moving average. And on my chart that's just specifically for you, I have it as the simple moving average. So do you switch back and forth, or on the 200 you're just looking at exponential?
No, sir. I have both of them.
You do.
I have the standard and the simple and the exponential. The point is that whenever the exponential crosses the simple, it's a good news. The other way, then it's a bad news, and it tells you ahead of time, about a month or two, when that crosses down, the simple crosses the exponential, a month or before. Believe me, it will tell you that there is something wrong with your stock. If you're long, just get out and be prepared.
Got it. Hey, Garo, I'm sorry to cut you off. We're just about to go to a hard break, but hey, Happy New Year to you. I'll add that to my chart so the next time when you call. And thanks so much for calling in. That was Garo in Newport Beach, California. We'll be right back.
This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we've got 4 questions here that have come in by email. So let's go ahead and get to those, and hopefully we'll have enough time to go back and take a look at the NASDAQ composite. But in some cases, what I'm going to take a look at here for the S&P and the Dow and answering this first question can really be applied about the NASDAQ composite, which we touched on when John and I were looking at the longer-term charts out there. But Earl writes in, he says, "Hi, Steve. Does the market have to make new highs to say the correction is over? And get rest this weekend." Yeah, easy to say. No. New highs, breaking to new highs to me would just say, not that the correction is over, but that we're really off to the races out there. But the correction itself generated some beautiful bottoming signals out here. Take, for example, the S&P 500. What it did was it completed an A to B equals CD to the downside. So we'll just, for our purposes, we'll use the high from October 3rd as the A point. The B point is October 29th. The C point out here looks like November 7th or the following day. Should I have this turned off to just a 1.1618? Give me a second here to edit the tool, the A to B equals CD tool. So here's the 1 level. Here's the 1.272. Whoops. 1.272, type it in, Stevie. And so you can see that it made a 1 to 1.272, A to B equals CD. So what we know out here, Earl, is this was a Gartley buy pattern. Because the Gartley buy, and it's the first one that we have seen on a daily basis since that major low that took place back in February of 2016, I believe it is, November. 2016 is the one that we'll use. So a nice A to B equals CD pattern that completed. That makes it a Gartley buy in this case because of such a big run to the upside. And that says that the correction could be over. Now, could be and is are 2 different things. Ideally, we would have seen that pattern, and then it would have been earlier in the year. The problem with it occurring on December the 26th is the mere fact of where price is trading in relationship to the into the end of December 2017. That's 2673.61. Unless price closes above that, then that says to me this pattern that we're in, whatever we want to call it, still has some more work to do. And more likely than not, we see another test of these lows out here. Does it have to happen? No. Is it a high probability? Yes. If you say how high, I will share with you a 75% probability that if the S&P does not close over 2673 come Monday afternoon, Monday at the close, that we just are seeing a counter trend rally. I don't know if price will go all the way back down to test the bottom. or if they'll go through it. But it's just not really the ideal setup that we see. Now, look, the U.S., by the way, is the best place to be. If we take a look at this is kind of interesting, or maybe it's just got, maybe it's not interesting, but I'm going to make it interesting. And if we take a look at this, here's our asset performance through about maybe an hour ago for several different assets. So the Dow we'll use as the proxy for the U.S. market, Treasury bonds, U.S. Treasury bonds, the U.S. Dow, what the Shanghai's done this year, the DAX, emerging markets via the EEM, gold and the euro. So if we take a look at where we're at right now, 2018 versus the close at 2017, the Dow's off 6.1%. Not too bad. Bonds are down 5%. The dollar's up nearly 5%. The Shanghai off 25%. The DAX down 18. Emerging markets down 16. Gold is off 2%. The euro's down 4%. Where has it been the place to hide this year? The U.S. dollar, right? The U.S. dollar is the only asset class, so to speak, out here. And take a look at these that has moved to the upside. What does that tell you? Do you really think that's going to end whatever it is that takes place with regard to interest rates and Jerome Powell out there? I'm going to share with you the answer is no. The U.S. dollar is not done moving higher out here. This is not an anomaly. This is where funds around the world are flowing to. There's a lot of conviction behind the U.S. dollar. Take a look at 18 versus 16. 18 versus 16, where we're at right now versus 2016. Dow's up 17%. Bonds are off nearly 3.5%. Dollar's down 6%. Shanghai off 20%. DAX down 8%. Emerging markets up 12, gold up 11%, the euro up 8. The Dow still is the outperformer out here. 18 versus 2015. The close of 2015 is what I'm using out here. 33% for the Dow, minus 5% for bonds, minus 3% for the dollar, minus 30% for the Shanghai, flat, but minus 2% for the DAX. 21% to the upside for the emerging markets, 21% for gold, 5% for the euro. Go back to 2009, not March of 2009, the end of 2009, December 31st, 2009. The Dow's up 122%. It's leading everything. This is going to continue, Earl. So we are not done moving higher in the markets. That doesn't mean we're not going to go back and test the lows, maybe bust out the lows out there. But we're not done moving higher inside of the Dow. So I hope that answers your question. This is still where it is that people are moving to. And oh yeah, for all you folks that thought quantitative easing was going to go ahead and send gold to the moon out there, doesn't look like it, does it? Printing of money doesn't mean that gold is going to go up. It just doesn't. Okay, let's go take a look at Bonnie. Bonnie C writes in, great call in 2424 support. You called on December 26th. Thanks. I bought the SPY as it hovered at 230. Well, no, well, you're welcome. I guess that was just a great call point out there. Well, you're welcome, Charlie. Now, you got to be careful now. You've got to be careful. I think that you have to be careful. You don't have to be. You can see how far away the Dow is from the December highs out there. The Dow is also, it doesn't have the same pattern as the S&P doesn't have the same pattern as the Dow does out here. So you've got to watch that Dow today, and certainly, look, I can easily make the case that the markets will go higher on Monday. That, of course, it depends on where we close today. If we close below Stevie's red line on the equity futures contracts or the indices out here, then that could be a slightly different, that could be a problem out there. But be careful. This, if anything, this is a market, this is a two-sided market out here. It's neither bearish nor bullish out here. Directionally speaking, if you want to use bearish, we use bearish, that it's moving down, and bullish, that it's moving higher. That's fine. But are we in a bear market? Well, if you want to be the one that goes ahead and uses the fact that once you have a 20% or more correction, that's a bear market, that's fine. But that also means you can never use the Fibonacci tool. If you're going to take that approach, you have to throw away that Fibonacci tool. Because when we go take a look at how price moves between swing points, that most people are waiting for that 61% retracement, which we're nowhere near out here. So I just say be careful. Keep an eye on the Dow. If it doesn't close above 23,360, it's a problem. It's a problem. This is where sellers, in essence, are camping out. They're just waiting. This is where people are looking to maybe unload, lighten up their portfolio, go to some cash, let the market prove itself to us. That's really where we're at. We come back from this break. I'll take a look at these other two questions, see how quickly we can get through those. This is Steve Rhodes with TFNN. Dow's up maybe 5 points. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. So somebody from T-Mobile sent in and said, hi, Steve, is the consolidation for the Dow between 27 and 26,000, 22 and 26,000, so does that mean that the panic is over? No, absolutely not. And by the way, the consolidation level is between 26,616 and either 23,344 or 23,360. That's either the low of April 2nd or the low of February, or maybe it was February 2nd. April 2nd and February 8th, February 9th out there. Those are the two levels. And price has gotten up there. Just for the heck of it, if we take a look at Fibonacci retracements out here, and we just go from the last leg down, the high of December 3rd, to the low on December the 26th out here, we also happen to be at a 0.382 retracement. Thus far, all that we can say if price stays underneath that consolidation is we have had one nice dead cat bounce. That's all that it has been out there. So panic, no, I don't think that that's over. We made a solid bottom. We've made what could be a solid bottom. It just is coming a little bit too late. As Get Smart used to say, Don Adams missed it by just that much. And that much would be 24,719. The last question out here is asking about HYG. So if we just go take a look at HYG, that's the high yield bond fund out here. You can see that this is really a great gauge for liquidity as well. This is mimicking what you just looked at inside either the Dow or the S&P 500 out here. And what Sylvia wants to know, do you think this is a good spot to short the shirt off of HYG just before the gap out here? I can't answer that in the next 10 seconds out here. So I apologize for that. Wait for some proof. Just wait for some proof out here. And also take a look at, there's a possibility that the lows that were put on the 26 are just going to be tested. So then you've got to take a look at the reward risk. So no, don't back up the truck here. I don't see that either. Hey, folks, thanks so much for being here. Stay tuned. Well, I think we got Tom O'Brien from 3 to 5. I'll be back with you on Magnificent Monday. Have a great weekend out there. Be safe. No drinking and driving. Drinking for sure, just no driving. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.